Hey everybody, welcome back to Markets and Sectors. Great to be here with you today. My name is Mike Fairborn, and there's plenty to discuss today about the FOMC meeting and what was discussed there. I definitely have some key points for you, but today I really wanted to focus in on one key long-term moving average that can really help give you a gauge, just which has been shown historically to be that way, in terms of, are we seeing bullishness or bearishness? It can help in that regard. So I'm really looking forward to diving on into that with you and discussing more details. Folks, I'm joining the chat, good friend of mine, Mr. Ben Watson, 20, possibly 25-year veteran. Ben might have to clarify that for us. Got Ben in the chat. Great to have Ben on board with us, folks, and great to see each of you here. We've got Ray. How's it going? Ray, Andrew, Jay Richardson, David, Brown Buffalo, Chris, Wrong, Life in the Fast Lane, as well as Joe. Welcome all. Any questions, comments you might have, definitely throw those into the chat so we can address those for you. But looking forward to diving into this and really talking about that one long-term moving average that I hope can help give you a better sense of where markets and potentially even sectors may be headed. So with that, let's start off and dive right on into our disclosures here. Now, information here is provided for general information purposes only. Paper money software application is for education purposes only as well. Investing does involve risks, including for some products more than your initial investment. Futures and futures options trading do involve substantial risk and not suitable for all investors. Some additional points listed there, as you can see on the slide. Now, in addition, Schwab equity resource ratings and general buy and hold sell guidance are not personal recommendations. Past performance is no guarantee of future results, and historical data should not be used alone when making investment decisions. The STAX is not a tradable index. I did want to take a look at the STAX today. The STAX should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. Now, a quick look at upcoming workshops that you can see right here in Market Drive events. You can register listed right there at that URL. That's schwab.com/events. We got the Detroit event, Denver, Anaheim. What I love about these events is, let me tell you what I love about these events. Ben Watson, in 2 words, Ben Watson. I love Ben Watson. He's full of energy, does such a great job at these events. And folks, of course, we do have Ben Watson in the chat, but I encourage you, if you are in that neck of the woods, you may consider, I definitely consider, taking a look at maybe one of these events. They're just great experiences. I've been to a couple with Ben, had a great time with him, learned a lot, and I was able to teach a lot too, and talk with the people face to face. So, having said that, well, let's do this. Let's dive on into our discussion here right now. Now we're taking a look at the S&P 500. Now I did send a little bit of a tweet out on, that's right. Sorry, just looking at the chat for a second, but that brings back memories. Now there is a longer term resistance level that I've been kind of looking at, sort of tracking and wondering here if the S&P 500 index would throw us a little bit of a bear flag. I like to talk about some of these swing trades in my Tuesday class. We're talking about this at length because a lot of stocks are reflecting the S&P 500, which is not too unusual. A lot of companies in the S&P 500, but a bear flag after we've taken out some of these lows over here as well. Will we get a bear flag and come down? Well, a lot of that bear flag and bearishness could rest on what happens at this 5660 level initially. Look at us. We're right there. We're right at that level. We bounced off it. It does look like a bear flag right now, but what's going to happen with that bear flag going forward? That's really kind of the key question, right? What could we see with that bear flag? What's that scenario? What's that situation looking like? The FOMC announcement came out. The Fed mentioned today that they were expecting a strong economy. They left rates unchanged. They had some updates for inflation, which didn't seem too bad. You could take a look at that. There are some updates for the dot plot coming out, or the expectations that the Fed has for potential rate hikes to the end of the year. What they showed yesterday was that those rate hikes are really the probability just kind of shifted higher right around July-ish was what the number was looking at. But we'll see. I mean, that can change after today. So just be mindful of that in the news. But I want to throw all this out there to you right now with that Fed announcement right at this place and time, because here we are sitting at that level. Okay. Now, for those of you that have come to this discussion each and every week, you'll note that we do like to take a look at the simple period moving average, one that's heavily used. It has been noted to be heavily used, I should say, by a number of market technicians and analysts, and that is the 200-day moving average. And you'll notice where that stands. And I think we have a double resistance barrier. Now, we might be just breaking through that resistance today, and we've got one just above us right here. But these are two key areas that might help to determine, is it going to be a bear flag, come up here, and with the possibility of coming back down, question mark, or will we be able to break above and hold above those levels? And that can also be something of interest, what we do around those resistance points right there. Now, that's the chart, and that's very, very interesting because those two key points are coming right in line. Let's look down here. RSI at the 50, a totally different, separate indication. Can we get above 50 or not? Now, that's something that I would like you guys just to take a look at. It just gets you used to looking at indicators too. Take a look at RSI or another indicator that you might be using. We talk a lot about the relative strength index, but can we get above 50 as we take out those two resistance levels or not? I mean, if we can take them out, do we also cross? Do we get an RSI rating that is greater than 50? Because that is seen by a lot of technicians. They'll say that, yes, that's more bullish. So we're really looking for two things to happen here: getting above those levels and an RSI read being higher as well. So those are important. Now, with that too, you guys do know that I love to look at volume, and we can't look at volume on the SPX, but we can do it on the futures contract, which we do take a look at in this class frequently. Look how much closer we are to the 200-day moving average when we're looking at futures, because sometimes, not every time, you'll have to tune into Ben Watson's class. Does a great job of it in his futures class in the morning. I do chat for him. But do we or do we not, does futures sometimes lead the market? Sometimes it does lead the market. And look how close we are to that 200-day moving average. One thing that I want you to look at here, along with that RSI of 50, which is right in here, we're getting very close to it. It's a little bit stronger on the futures. You can see that oversold condition here on the ES and the sharp bounce up higher, okay? But what I'm looking for here is not volatility, folks. I'm just going to spell it out. That would be volume. What does the volume do here? Volume. Does the volume start to peak back up over here? That's the question. We'd like to see strong volume as you're taking out normal areas of resistance. On the futures contract itself, this last significant low right there, which really helped to define this rectangle, also known as the measured move, right through there. Notice that it coincides so well with that 5,800 level. Let's just put it in there because we can't quite see it, can we? There's 5,800 right there. So notice we have a couple key resistance points to look at. SPX, ES, volume, RSI. These can be helpful for getting us a little bit of additional confirmation. We know we're already getting some caholds at the bottom, closes above the high to low day. Bam, right there, we got a cahold. Okay, but it just so happens, yeah, there's a 200-day moving average there. There's long-term resistance. And, how do we respond with volume in the RSI? So a couple of things, right, to look at there. Wanted to get outside of just price activity and start taking a look at some of those indicators. So critical to do. Now, what I wanted to do as well, let's take a look at the NASDAQ. We'll just go right into the NDX here, because this too is very, very close to its 200-day moving average. And you can see here that it has resistance near prior key highs and lows, right? We know it was over here. It was resistance here. You get above it, well, we refer to it as support. We get back below it, we call it resistance. So these two are pretty much entwined in terms of the NASDAQ and the S&P 500, very, very close. Still not a read on the 50 RSI yet, but definitely some key areas to look at. All right. Now, what I wanted to do was talk to you about a book I'd read a long time ago. It was really in the 1930s. Okay, I didn't read it in the 30s, but the book was from the 30s, obviously. But it was from one of the heads of a major financial institution. And he had talked about that, he was using a moving average, and this was like really, really kind of new to them, using a moving average back in those days. And because they just didn't have technical analysis. So they were plotting that every day based upon an average. Now, what it was a longer term moving average, and it was used to show that it had called, basically what they were saying is that it had called 13, or I'm sorry, it was 12. Now, because I had to open those books back up again, but 12 out of the last 13 bull and bear markets. So it's a long-term technical indicator, which you'd think a large financial institution might be more interested in, right? And so I wanted to talk about that today because I think this is so helpful to use, and it actually kind of is fascinating as it does relate to, let's say, a longer-term moving average as well. So let's go over here. I'm going to highlight this. It is actually, let's go back to our S&P though, S&P 500. This is beautiful because the S&P 500 does list over here. It's a monthly chart we're going to be looking at. But you'll notice over here, this is our moving average right there at 5650. 5660 is where we saw that long-term support level. Now, this is going to be a simple moving average in here, but it's just one more year beyond a standard year. So it's 13 is what it is. It's a 13 monthly moving average. Interesting, isn't it? A 13. They just added one additional year. So it's your standard 12 months plus one. That gives us the 13 period moving average. Now, they were just using simple moving averages, but when I say period, what is that period, folks? That period is specifically around a monthly, and that is what this book was talking about. Now, the bull and bear markets that it had shown were back in, like, well, it was back a long time ago. And I want to take a look at it on the S&P 500. I want to look at the Dow and show this to you, and because I think it shows particular importance today because we're right at that key resistance level that I'd shown you all right here. And as we mentioned, the 200-day moving average is just above that 5650. So notice how we're right up at that level. The last time we touched this point, we bounced right off it right there. Okay. Notice what it did over here. We were down, and these are months. So this was down for a while. When we broke below that level, we were down this month 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost a full year before we broke up above. And notice when we broke back up above that level, we had been holding above this point for a very, very long time. Again, that is the 13, in this case, month moving average, or MMA for short, the 13 MMA, monthly moving average. And we're seeing this right on a monthly chart. Okay. A quick note off this bottom, it gave this time. When you're looking at such a longer term moving average, it gives it time for potential reversal signs or signals over here. In other words, a higher high and a higher low to form as well. It does require, though, that's a higher low. It does require a fair level of patience, but you can see where we're at and why this area plays a particularly interesting role right now. I'm going to go ahead and take us way, way back in the way back. And I'm going to throw this over here. And by the way, a quick note, there is a survey that got thrown into the chat. And so if you get a chance to fill that out, that would be fantastic. Just want to pause on that real quick. You don't need to fill it out now, but you need to click on it now to get that filled out. I think there's only 2 questions. So if there's something you find interesting or useful, I'd love to hear about it, folks. And specifically, if there's something you find helpful and useful, I'd really appreciate it if you would like today's presentation, if that's the case, if you do find it informative and useful. So thanks for that. And by the way, while we're at it, just hit that subscribe button if you're not already a subscriber. I think many of you are, but just in case you're not, love to have you on board. Okay, let's scoot on back now to, look at this, a max available time frame on our monthly. I know, it's a chaos. You can't even see the data down here, but these are years, tons and tons of years. Now, you're going to see over here with me the clarity that you might find on such a longer term moving average. And it's a great reference as to what that executive of that company was referring to. Look at this. This is actually, in fact, the Great Depression that you're looking at here. Okay, well, I want to look at longer term time frames so I could explain to you what he was talking about. But when we broke below that level, that was a long time. Yes, down here, these are years, 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 years. It even captured a slight upward move here over that time frame, which was bullish. There's a lot of price action actually over here. I know the prices aren't too high back then, but percentage-wise, they are high. And look at this move. And look at the corresponding price movements over here, right? That was from 10 to about 17, about 70% move. I'm just eyeballing it. But then you get this breakdown here, and there was not a lot of clarity until, you kind of bounced off resistance right there. Look at this. You came right up. You held that level all through there. Let me just go through this slowly so you can just kind of see the history of this moving average in capturing and recognizing also some of the bear markets that occur after the bull markets. Look at this. It's really quite, this is the 12 out of the 13 he was referring to. I don't have the exact 12 out of 13, but I could just tell you those were the numbers he mentioned. He didn't state what months they were, but you can see right there. Look over here, right here and here. Let me use yellow. I've got blue on blue there, but there you go. That was up. I mean, just sticking, hey, prices above the 13-month moving average, folks. That's a simple, basic indicator here. That's what this individual is referencing. Look, you could see it through here too. And when there was a time of choppiness, getting out could have been helpful, could have been useful. I want to get into some of the more recent, but even back in like 85 and whatnot, I mean, obviously, the book wasn't around that time frame, but look at this. You broke up above, held. Nothing's 100%, but this can be a good long-term reference for you to kind of take a look at. In fact, let's scroll ahead again. I want to just show you this. This was the dot-com era, and even though we had some massive craziness, and this was actually like what they referred to as the Asian contagion. I believe so. It could have been the Russian ruble crisis. Anyways, we bounced it. We were down there 1 month, I believe, before we got back up above, but then noticed up top here at the top, look how well it called that. It's all in hindsight, and there's no guarantee when we look at past data, but I just wanted to state that it tends to be still quite interesting. Touch, all the way down. In other words, it stayed down when it crossed below. That was a long time. Remember, these are years. That was mid-2000. 2001, 2, and the beginning of 2003 before you ultimately got that signal to get back in. So what do you guys think? In this class, I mean, I don't think there's a better class that we even teach out there to throw this out to you because it is specifically around markets and sectors. But see what's out there? See what's interesting? I mean, it's so fascinating because even as you reference these shorter term indications, you can still see that, yeah, with the 200-day here and this resistance level, and I mean, getting above it would be fascinating because we have that long-term MMA right there. All right, so it puts a little bit more context into the discussion. No doubt about it. All right, yeah, there were some huge drops. That's right, George and others. Yeah, over different time frames. Yeah, I mean, it can be substantial. It just so happens we're a little bit close to it, but you can look at the S&P 500, even the Dow. It could be an interesting indication on longer term moving averages. I threw one out there to you. It's not often that we get into a monthly moving average, but like I said, for bigger term moves, and that's really kind of the question, they can be a little bit more helpful. All right, we've talked about markets a bit, and hopefully gave you some interesting things to consider there. But I wanted to take a look now at our grid, our sector grid, so we can evaluate what's been going on more recently and where we might be seeing some strength. One of the areas that does stand out that has just started to make some new highs in terms of sector analysis right there. Look at energy, breaking above some highs here. Now, we see a few of these sectors that have bounced off the bottom. Materials, industrials right there. We've seen some weakness in the dollar that might have helped to facilitate that a little bit. You've got financials bouncing as well. Even healthcare has bounced. Okay. utilities, but have they started to take out highs yet? That's where energy is a little bit interesting because we are taking out this high range. And so this could be a potential continuation, perhaps, of a longer term trend that could be breaking to the upside question mark. That's the question. Will it break out above and continue? It's one to maybe keep an eye on. Consumer staples has, in fact, dipped the last couple of weeks. Healthcare, though, has stayed relatively flat. And actually, let's do this. I want to break down a couple of these. I'm just going to right click here and we're going to maximize that cell right now so you can see it. And there you go. So there is energy. And if I take a look at energy and I back it out just to let's go to a little bit longer term time frame, like a 1 year, you can see that, well, it's been in a sideways channel. The one thing you have to say is, yeah, we might be taking out some highs right here. Technically, higher low, higher high. The trend could be moving, and that could be a positive sign for it. Let's zoom back out now. I'll clear these off, and I want to look at healthcare. I'm going to right click and come down here to maximize that cell. Let's go to a 1 year. Give us a little bit more of a reference point, but there you go. There's your 1 year. It gives us a little bit better perspective of that possibility of a trend line break coming through here and the change in a trend. Higher high, higher low. These are higher lows than this low. This one's a little bit, I have to say, this is a little bit lower over here, right? This is a slightly lower, true. This is a lower high right now, but this still could be like a sideways, sort of a flag pattern over here. And we could be positioned for the possibility of a break to the upside, which is what some traders would look for in terms of healthcare. So having said that, what you could do is look at, you could do a scan over here, and we could look at those companies within healthcare. Oh, excuse me. I should say in the S&P 500, very important. So scan tab, sub tab is the stock hacker. Okay, so we can find these stocks. I'm going to go to the S&P 500. I'm going to go right into industry and take a look at healthcare. Select that collectively. Now we're just getting all the companies in the S&P 500. I like this a lot too. It saves time. I don't have to list in here market capitalization, volume. Now I could do that. I could do more. I could list additional items, different criteria. But because it is in the 500, and that was the chart we were looking at, it's going to be exclusive to those companies that were making up this trend right here. So all the companies I'm about to show you are every one of them, and not one more, one less, that make up that chart. It's everything in healthcare. Okay, so it's really cool. You can do this and just pull that up, but there you go. You've actually got 61 companies that make up that chart. That's a huge basket of companies. But do you think many of these could be? I mean, some of these could be also flagging. Yeah, perhaps. There could be some that are in that position because the sector is itself. So that's one that's actually showing a bull flag. You can do the exact same thing for energy as well. Just a good, quick way to kind of break that down. Okay, now those are charts and those are sectors. I wanted to share this in case any of you did want this still. There's the 6-month grid right there. I'm going to throw this into the box, the chat box. Now, this is not like a think script. These are just charts. Okay, just as a side note, these are just charts. Okay, cool. Well, let's do this. Let's go back now. And before we dive on into some additional specifics with the market, I didn't want to go any further until we talked about another commodity out there that's really been showing some strength. We'll see what happens going forward, but look at gold. Gold futures, really quite strong. I talked about this yesterday, the swing trade class, looking at some of the gold miners, but look at gold going higher. If we're looking for strength, it's really hard to find, especially if we're looking at, we couldn't really see it in the market sectors right now. The market's been weighed down a little bit. But if you look at outside the market sectors, there's gold. Here's a longer term perspective of gold right there, breaking just into fresh new highs. Now, one thing I told the class yesterday is when the price of gold, this is how you can use some of these commodities, gold itself. So when gold itself, the price of gold, that is, goes higher, you got the miners out there, the gold miners, and the miners themselves, okay, the miners, the sales numbers for the miners can improve if they're getting the gold out of the ground. So sales, and we can also call that revenue, like on the income statement, but sales can also go up if they are mining and they're getting that money out of the ground. So this could also be an interesting area to keep eyes on for possible breakouts. And so let's do this. Let's take you into some of those right now. I had ran through this list, so I figured I'd just show this to you guys as well. But these are some of the gold miners that are out there that had volume characteristics, etc., um, that have been breaking out too. Now, let's go back to a daily chart. This is maybe one of the stronger ones, but you can see the possibility of, let's say, for example, over here, a bull flag possible formation. That's the T2 target that we talked about up top here as well. And so that's one that hasn't hit a target. We don't know if that's what will happen, but you can see that it does look a little bit similar to gold in terms of the breakout. What we also discussed, that we did have some companies that had just not yet quite broken above this range that we were looking at. And here is one of those, NEM. In fact, this is just, we have a paper trade on this one, but you can see what we were looking at in terms of a breakout into a higher range. I think many of you know, like price targets and projections for a bull flag. But yeah, could this be influenced by the price of gold going higher? Definitely. I mean, it could. I mean, if they're getting more, if that gold is worth more, which we saw, gold broke above 3,000. Okay, that was one of the big numbers that analysts were talking about. If gold can do that, then these companies can generate more revenue. I mean, that's how businesses work. I mean, if you can generate more sales and keep expenses relatively in line, well, then down here, earnings can go up, right? That's the question. But I mean, that would be like one of the key drivers, the price of gold. So whether that happens or not, that remains to be seen. But I just wanted to highlight that for you, just as a side note, because that's quite important to take a look at. Now, a quick note just to that, we talked about, as a side note, if you want to dive into some of those details specifically, you can take a look at our Trader Talks channel. Ben's got a number of great classes in here. There's Ben right there. Specifically, though, if you wanted to look at this class, I talked about gold and gold miners. Well, we did put on that paper trade right there in that swing trading class, just as a side note. So you can click on that if you wanted to, but there's our Trader Talks. And again, I encourage you to subscribe to our class if in fact you are interested in doing so. Oh, by the way, I'll highlight this real quick while we're at it. Since we are on gold, I'm just going to go ahead and put this link into the chat, but that's what we discussed yesterday. Okay. There was a little bit of a delay getting that up, but we did get it up, and there you go. So had to redo some of that. But anyways, this is what we've got, and I'm going to just put that link in right now in case you want to take a look into more details. But yeah, gold miners showing some strength. Another one over there was just gold itself. Got a lot of lines on that. That actually had broken above the high. It's not as high as like Agnico Eagle, which is AEM that we talked about over here. But I mean, some of these are kind of in the process of maybe flagging higher. They're a little bit lagging gold, some of them. But yeah, remains to be seen if they'll unfold as well. But that was kind of breaking down gold prices specifically here for you that I wanted to really talk about, because yeah, gold goes higher, that too can lift the miners. And gold's kind of in that strange area where you're getting a lot of geopolitical risk. You're getting a lot of central bank buying and hoarding of gold. China, India, Russia, some big countries out there that are purchasing gold, and that can put gold prices on a higher trajectory, perhaps. Of course, you've got interest from retail investors as well, because is trending higher. Higher highs and higher lows can attract people from time to time as well. Okay, very good. Well, let's do this. Let's go ahead and jump on into our normal discussion. which I wanted to go through and take a look at a market sector review and some of the key areas that we like to look at here. This is really quite fun because now you have a bigger context of what might be resistance and what might be potential support down here in that long-term MMA. But what's going to happen here? What are we seeing in terms of the chart? Well, what's interesting is, first of all, we did get a break above the -70, and that's a 2 to 3 week, put a week in there, potential move up according to the McClellan oscillator. Tom McClellan, behind that, anticipating that, hey, there could be a 2 to 3 week bump, and that's all else equal a positive. The McClellan Summation Index flattening out, it's no longer going down. That could be another positive. And finally, another positive here is that our AD line, our advancers decliners, take a look. It's actually having positive divergence and actually showing quite a bit of strength right now. Let me highlight this even more because I think this is maybe the most interesting thing on this page, along with price data that we discussed up top. But look at this. Looking at divergences here, notice we broke those lows right there in price. But if we take that exact low, highlighting it right there, so that's the low I'm pointing to, we did not take out that low yet. So our decliners did not exceed our advancers. And now that could be construed by a lot of traders as being a positive sign as well. They could call that a positive sign because we just didn't get the selling pressure. Another way to look at it, the selling pressure, just like we saw on the ES. The ES, the futures contract for the S&P, it didn't go down as much. In fact, volume started to wane off a little bit. Fewer sellers on the pullback. That's quite a spike right there. That would be referred as a positive divergence. Now, it still has to take out a couple of double resistance points here that will be key to defining a bear flag or the possibility of a bounce follow through and possibly an extension of the trend higher. We're seeing a number of companies that might look like this in the market. Let me just flip back to one. Well, okay. I just want to show the chart here. Netflix, for example. Look at Netflix. Now, by the way, ignore all these advanced decline lines because they're just for the S&P 500 as well as the NYSE. Actually, NYSE through here. But notice over here on Netflix, I sent a X post out on this recently. Potential significant support level. That's an earnings gap. Lots and lots of volume. When you get a lot of volume on these gaps, it can be extra important right there. It can be. Okay, and we held it. We held support. And now, look where we're at. We're holding resistance. So we're seeing a number of, maybe some of the names that you might recognize and some of the bigger names out there that are running into potential. Can they break through or not? Because if so, does that mean that there could be an extension of a very obvious long-term trend? We might be right at that turning point right now. And so there's a lot going on here. I'm really interested to see how earnings continue to come in especially after, this earnings, this Fed announcement as well. That I do think had some bullishness to it, and you can see some of the markets reacting that way as well. Now let's flip this back to the SPX, and we shall continue forward here with some other indications. Now the SPX EW, it did break a new low, and this is a lower low, lower high. This was a flag pattern that we were looking at for the longest time. Wow, it broke down pretty sharply here, but there again is the bounce. Collectively, if we're looking at an equal weight, that's SPX EW, equal weight is the EW there. We did take out resistance here. So collectively across the board, we're actually seeing some strength in the S&P 500 index. But what we have to say is that the other side to offset this is that the trend is down. The longer term trend for the entire group is down, and that is a potential negative. Although short term, there is a positive here because we are showing early indications that it's taking out resistance. And so what would be the next thing? Let me ask you all this. What would we be looking for based on some of the things we talk about in this class? What might we be looking for on the equal weight here to give us further indications that, well, there might be a change in trend? In other words, this trend that we'd highlighted, it may in fact begin to make higher highs and higher lows. Any thoughts on that? Let me throw out a couple because, I mean, breaking of a longer term moving average, where's the 200 day? Why couldn't we use that on something like an equal weight? Okay. How about a run up here that might actually form into a higher low? So some strength over here too. Can we get enough days to follow through where prices go higher? If you look at this, look at the number of days down. So just comparing this, here are the number of days down. What if we had equal to the number of days down, equal to the upside, the number of days up or shorter, where we could make a new high over here? Do you see the strength of that trend, how it would change if we could do it quicker in fewer days? If we have fewer days that it took to form the bottom, if this reversal comes up, that's known as like a potential V bottom. And that's where the strength comes in. Now that could be a positive sign, some traders would say, because yeah, you are taking out those highs and you're doing it in a shorter period of time that it took for the downward move to form. These can be considerations. 2 to 3 day positive follow through. That's right. RSI, you got it. We talked about that. Thank you, Ron. Yep. Riceberg, yep. Above the 50. Keep an eye on that. Do we have that yet? These are really interesting considerations for a bounce. Can you get above 50? Because if not, well, that could be a bear flag, not a bull flag. But if you can, all these things can factor in. All right, that's the equal weight. All right, so there's still quite a bit going on here at this turning point. It's interesting to see. There's our 5-year weekly, and what I want to really discuss with you here is on this that we talked about last week in great detail was the Hindenburg omen, right? That's when the 52-week, you got 52-week highs relative to 52-week new lows. If you get a large enough number of lows being made, 52-week lows, or annual yearly lows being made at the same time you're getting yearly highs, that can create a chasm in the market, and it just stands to reason. It makes sense. If you're getting some weakness off enough companies that are making new lows, a lot of times that can be just simply earnings related. If earnings are getting bad, it shows signs that the economy is weakening for enough companies. And I mean, if you start to get bad earnings, it's very, very difficult to keep trends going higher. That's the question. We don't know if that will unfold here. We look at this, though, on a weekly chart, which is exactly what we've got up here. We like to look at this weekly, but these omen spikes, when you get a number of these together, a confluence of omen spikes, you've got to be really, really careful. Case in point right here. Notice this last long top we had, higher highs, higher lows. I like to go through this every week just because I think it's a big turning point potentially for a move. Now, do you guys remember what that MMA was doing over here? The MMA, the monthly moving average, we'd broken it. The MMA got broken right there as the trend began to shift lower. It was also confirmed by 52-week new lows and highs being big enough, causing a chasm in the market, and it dipped. That's about 1/4 there. That's about another quarter there. That's about a half a quarter there. That's about, well, you'd have to say about, 7.5 to 8 months of a pullback, which would have been nice to know. Great thing is we can look at this over here and try to give us a sense of, could that happen again going forward? It's a could it, because we are looking at the future. Nobody knows what the future is going to be, but I don't know. This is looking quite similar if we did get a breakdown. You guys have a longer term moving average to take a look at now to help confirm, and other indications too that we looked at, but we're getting that, and we're waiting to see if we got a lower high and a lower low, because if the trend can combine with this, if you get the trend too, here, like we've shown, trend going down, Omen spikes, trend going down, Omen spikes. That's a key point. You can get these though, like you saw it over here, but the trend did not turn down, higher highs and higher lows, and it was a false read. In fact, we kept getting higher highs and higher lows, and a pretty decent run actually here too. So you want to combine the weekly Hindenburg Omen with the trend and perhaps that longer term moving average as well. All right, let's continue on. Here we go. A bit of a sign of weakness, but we didn't make a new high yet. Okay, and that's okay. Notice we didn't make a high right there. Key point, no highs being made. So we didn't really look at this in as much detail, right, with the highs being made over here, but generally speaking, we were exceeding 250 new NYSE highs every time the market made a new high. We had new highs also helping to kind of reinforce that trend higher, collectively. We didn't get a new high here. And of course we didn't, and that stands to reason we didn't break above 250. But if we did get another new high, historically, at least over, all through last year, we were at least getting a break above 250 or at least a fair number of new highs out there. And we'd want to maybe see that too for a positive read. Okay. Getting towards our end here, what might we have to look forward to? Well, if we see a seasonal pattern, again, looking at January over here, and you got a read for February all the way through to December, over the last 10 years, what might we see? Where are we at? Well, look, this actually played out pretty well for March. Notice we came down, and so we're looking at an average in red, and what we have in cyan here, that light blue, is this year. And notice this year is very, very similar, although the magnitudes are totally different. It's kind of similar magnitude on the upside, but look at the downside. This year was a pretty big pullback. Question mark is here is, will we start to see, because it's unfolded very, very well with the past, can it continue, and what can we be watching for? What we can be watching for, folks, is higher highs and higher lows through March, April, and May, if in fact that does unfold. But if you start to see higher highs and higher lows, it may unfold like a seasonal chart pattern that we've seen at least for the last 10 years. You're going to see something very similar if we went to a 15-year, 20-year, even 30-year just worth of data. It does look quite similar. Okay, so you see these normal seasonal patterns unfolding this way. All right, last but not least, our 30-day, 30-minute chart. Sometimes it's a great idea just to throw more data out there. Because we're breaking this down, we're getting more data points, and we're saying, well, instead of just looking at daily charts, and by the way, you guys, we went through it today, we looked at monthly charts all the way that far to that end of the spectrum, but now we're at 30-minute charts. What does this line represent? It's beautiful. With Thinkorswim, you put it on a daily chart, it's going to show up on all these intraday timeframes as well. That's exactly what we pointed out earlier. That's the 5660 level. We have a very good idea that the 200-day moving average is very close to it as well, like right into this range, right? Where we kind of gap down. But now you can watch and see what kind of a formation we're getting over here. Interesting. We broke, actually, some short-term highs right there. Higher high, higher low. And will this continue on up? That's actually a really interesting reversal pattern if it does unfold. We just know that there is substantial resistance there. It's going to be interesting to see what happens the remainder of this week. Folks, I hope I gave you enough things to look at here. We ended off at a very, very short-term time frame, but we had taken it all the way to the extreme on a long-term monthly. But all of these can really work together to give us a sense what's happening in the markets, what may happen, as well as sectors, and breaking it down. We broke it down to specific companies today for you as well, folks. Do me a favor. If you did like this presentation, you find it helpful, it really does help. It helps me to understand if you like it. Just smash that like button. So easy to do. Love you to have you subscribe, as well as, of course, that survey that Ben has thrown in the chat for us. All right. Well, it's a pleasure being with you all today. Hope you have a fantastic rest of the day. I'll look forward to next week's discussion, seeing what does happen around these levels. Should be very interesting. See you next time, all.